I think a lot to be positive about going into 2026. I think 2025, we've done like the really tough work of like, if you've got like a body that is infected with gangrene, you need to cut off those limbs. And I think we've just eviscerated those limbs. And maybe we have like one leg and, like half an arm, but like we're regrowing them in a more productive direction. And I think that's about as much as the industry can really hope for. It's not a nuclear winter. There's fundamentally things being driven. There's inflows from these ETFs, but we really do need to leave behind the fuckery, the meme coining, the NFT shit, the overfocus on decentralization. And you don't need to disavow these things, but you just need to kind of move past those as the focal point of this industry because it's just not.
Hey everyone, quick disclaimer before we get into today's episode. Nothing said on Bell Curve is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely our opinions, not financial advice. Our guests and I may hold positions in the companies, funds, or projects discussed.
Hey, we are recording. There we go. All right. Well, we have not come up with a name for the new podcast yet, nor have we made any other logistical plans to put it on the air. And as such, we are returning for a special guest episode of Michael and myself to Bell Curve, the podcast that we were formerly a part of.
Yeah, we are working on a couple of titles. To be honest, I think some of them are kind of hilarious how bad they are, but we're going to let them simmer over the next couple of weeks while we enjoy some holiday time and reset for 2026. But we did want to get back on the air just to be able to put out some thoughts on 2025. Kind of let's do a little bit of a review. Kind of a fun time given everything that's going on to review, but then also think about what's going forward into 2026 and kind of like where are we with crypto. And I'd say, this will definitely be kind of a continuation of the conversations that we've had over the last few years on Bell Curve. I think it'll be very crypto dominated in terms of the content and the conversation. But I'd say looking into next year, just as crypto is doing, I think we're going to be expanding into other areas that are adjacent. They're connected to crypto and blockchain technology, but things like energy. Things like more institutionalized financial services, things like AI, like those are areas that are definitely being they're growing on their own, but they're also being integrated into the crypto landscape in unique and interesting ways. So we're looking forward to coming back to the new year with a new title for this pod and a slightly different new set of content.
So I think kind of the first thing to do is give maybe not a super in-depth interview or review of 2025, but I think at least acknowledging that 2025 has been choppy to say the least. There's been so many different chapters. Like the meme coin mania was really kicking off in Q1 this year with the Trump meme coin hyperliquid launch probably like a year and a month ago. There has been so many different narratives within crypto and probably the death of some as well for the benefit of the industry. But maybe just to kick it off, like Michael, what's your 2025 wrap?
I mean, yeah, going back, let's say probably a little bit more than just a year, thinking about November 5th, 2024, Trump was elected. Bitcoin rips. Everybody thinks that this is going to become like the Bitcoin presidency. You've got a very strong market leading into the end of 2024. I think if you polled the audience of participating crypto members, they would 9 out of 10, 8 out of 10 would say 2025 is going to be the year. And I think if you talk to founders in the space too, it led everyone in the direction of this is going to be the year to make it. We finally, 4-year cycle, not 4-year cycle. Well, like base case is 4-year cycle. And if it's not, it's still going to be bullish because Trump, all of this, that, the other thing. I think everybody that like there were no higher expectations going into a year for crypto than we had basically coming into 2025. And we had a lot of footfalls and maybe even way bigger issues than just footfalls. I think we as an industry did a lot of things to hurt ourselves. And the things like the Trump, Melania, whatever tokens, meme coins, like they didn't help either. And so I think it started off with some up and down in terms of price action and interest, and I think people were still kind of searching for a narrative as to what this year was going to be about. And because meme coins are basically like 99% speculative, 1% likeness, or whatever you want to derive as the tangible value, if there is any, they go up and down in rapid succession. I mean, thinking back to January, February, I mean, that's when you had Melania coin launch, and that's when everybody started to like go out and talk about how they were starting these agencies to help people launch their meme coins, and then it kind of all came to a crashing halt when you had what's his name with that Palm Angel shirt on going on the interview, and I can't even remember his name.
We also nuked the president of Argentina in the process.
like there were some really bad mistakes. But I think, the first part of the year was okay. Like everybody just kind of get your ducks in the line, and we're going to see where this thing goes. I also think, just to call it out, it was in a lot of ways the ending of that, which happened very rapidly. I mean, it didn't last much further than like February or March that kind of speculative fervor really kind of took off, went parabolic, dropped parabolically. And then it really kind of had to settle for a while. Like that's when you also started to see the tariff tantrum starting in March, April, and then coming to a crescendo, like I think May 8th or something like that. Like there was just a lot of structural change. And we talked about this internally, but you had a regime change in terms of the ways that these token projects were launching and kind of cultivating community and getting their growth, and it has completely shifted. And so broadly, I would say like 2025 and have like there's tons more subjects to talk about, but like my broad case before Vance hearing your perspective on 2025 is frankly 2021 going all the way back was 90% retail capital, 10% institutional capital, and the institutions were the few liquid funds that existed and the venture funds that were buying tokens, but it was mostly retail. The vast majority was retail. And what 2025 kind of encapsulated, which was a shift over time over the last 4 years, was a complete reversion of that percentage, where it's now 90% institutional capital, 10% retail capital. And we kind of say this tongue in cheek, but like after 10/10, October 10th, the remaining 10% of retail capital went down another 90%. So now it's closer to 99-1. But I think what, at least my perspective, kind of taking a step back, it was the final nail in the coffin of the retail capital, speculative fervor, and that kind of ended with the tariff tantrum and meme coins kind of not being the thing that people equated crypto to, which ultimately I think is a good thing. Like we can put that chapter behind us, and that's a positive thing for the industry.
Yeah, I agree with all of that. I think since 2022, we've kind of been in this series of rolling bubbles. I would say the immediate aftermath of like 2023, 2024 was kind of like this reflationary bubble, where like even like I remember Polygon going to like $13-14 billion, and now it's I think sub 2, sub 1, something like that. But like people just thought that FTX was the only problem. Let's reflate this bubble. Then we reflated it. I think that happened to a lot of vaults. Then in 2024, I think what people realized is that some of the alts were not probably as durable or fundamentally driven, or the TAM wasn't as large as people thought. And so you kind of had this rotation from BTC or ETH into Sol, from the Polygons or Lidos into the world into more fundamentally driven alts. And then I think you had the meme coins, you had the kind of speculative nihilism era. And I think we've kind of crossed basically all of those off in terms of process of elimination, and the industry has kind of come towards this whole idea of fundamentals is the only thing that matters. And because DeFi is the only thing with fundamentals, really kind of the industry is re-anchoring to its roots. And again, we don't think that there's 100 protocols that are interesting. There's probably 5, but that's kind of how the stock market works too. There's not 10 data center providers, there's 4. There's not 150 hyperscalers, there's 7. And so like those same dynamics playing out here is not surprising. And I think kind of what we also saw was the death of the kind of escape velocity strategy, where you can farm out tokens at a high enough FTV to get yourself traction, treasury, runway, to then go off and challenge the incumbents. I think the solution for too many tokens and too much supply overhang has been more tokens in some way. And now that there's been sufficiently issued tokens, I don't think there's going to be a ton of fast follows. So like if you're Aave, or Morpho, you're probably not going to be challenged by a new lending protocol for at least the next 3 or 4 years. And I would say the stable coins are in that position. And I would say probably Hyperliquid and maybe even things like Uniswap, although DFlow is kind of coming to their business pretty quickly. The incumbents have never been as safe, which is great because that means that they're able to innovate on a level playing field. But there's plenty of good stuff that happened. The BlackRock ETFs, the institutional adoption, a lot of just like window dressing for a future cycle, which I don't think is necessarily 3 or 4 years away. I think you continue to see this stuff grind up. With the ETF flows, like the BlackRock ETF had 500 million of inflows yesterday, which was super surprising for Bitcoin. And I think you're going to continue to see this industry be more linear, be less cyclical in terms of like the 4-year cycle, and be more driven by downstream currents like AI, general risk appetite, and just general institutional adoption. So overall, I think 2025 was positive, painful in some degree, obviously, with things getting kind of carted out. But we do have to kind of disabuse people of this notion that there is an alt season, because that's not true. What is true is that the things that are fundamentally driven will continue to do well. And it tees us up for 2026 because Clarity, which is the market structure bill, it seems like it will happen in Q1. And I think people have kind of gotten more bearish on it recently, but Michael, maybe your take would be interesting to get on just like what this means. And we've talked about just like equity research and stuff like that, but maybe like more connotations to the altcoin universe. What does it mean?
Yeah. So before we get too far into the regulatory environment, I think one other kind of take on 2025, which also does kind of go into a take on 2026 projections. But I think 2025 was a recognition that if you want to be, X big and, have the opportunity to have a token that's live and it's valuable. And there used to be a path where you could serve clients or customers that are crypto endogenous. And what I mean by that is you could be serving just like people who are in the crypto ecosystem. And that is enough of a business or enough of a protocol for you to build, something that's successful, whatever that definition is. And I think the recognition is that there are certain things that are crypto native that will do super well. Hyperliquid is another, I would say, one of the biggest 2025 things to happen in general. I know it started in 2024, but it really took off in 2025. And I would say that is a case in point of something that does serve the crypto native audience. But I think the recognition broadly is that the vast majority of things that are going to be successful in crypto are actually bringing things into the crypto universe that don't happen naturally within crypto. And this is why I think from the outset, we were saying things like energy, AI, financial services, like obviously financial institutions, they can come on chain. And like, what does that actually mean? Are they moving their assets over? Well, you got Apollo ACRED, you got BlackRock BUIDL, you got tokenization of assets broadly. Real world assets, we need a new term for it. We need to get rid of that. But that is essentially what I mean. And so like that transition, I think, is going to take a really long time, but the biggest strides of that transition happened in 2025, which kind of like leaves you like a step away from having a breakout, year in 2026. And so going back to the original question on Clarity or market structure, whatever we end up calling it, our view is that it's going to happen. There are certain people who think it won't. There are certain people who think it will. Just like our read of the situation is more positive than negative. Now the question is, what is in it and what are the definitions? The things that we know it will contain are definitionally, what is a security, what is a commodity? Probably not going to contain things like it's going to push a lot of the rulemaking to the regulators. It's going to say CFTC, you regulate perps and derivatives. SEC, you regulate fundraising and securities offerings, et cetera, et cetera. And so I think it's just going to, like, no pun intended, it's going to provide market clarity. And that is super important because what people are waiting for, especially as we bring assets on chain or bring new businesses on chain, energy, AI, what have you, is the people who run those businesses or the people who have that perspective on those industries need to have understanding of what these assets are. They need to know how they can work within the confines of crypto. And doing so, I think, will also provide coverage for the industry researchers or the equity researchers at these banks to actually start writing reports on them. Every single security that's over a certain size that trades in the stock market has coverage analysts and equity researchers who write reports on it, usually on a quarterly basis. And this is one of the benefits of going, and working with a bank for financing, is that the researchers start writing coverage about you. And there is, this whole Chinese wall of, if you are on the banking side, you're not allowed to talk to the research side. They're supposed to be impartial. They all work at Goldman Sachs or JP Morgan or Morgan Stanley, but, Chinese wall. But the point is that once they start covering you, the industry starts to understand how to value you. And they start writing reports with valuation metrics. And each one of these reports says, we're choosing to do this valuation heuristic. And so if you choose this valuation heuristic at like a 10x price to earnings ratio, if your earnings go up another 2x, your valuation should go up 2x. Like, that is what we don't have in crypto. And so when we talk about what is the fundamentals basis of these new assets, it's not just fundamentals for fundamentals purposes. It's not so that we can say the buyback is X and, like, therefore token should be Y. It's every single one of these protocols is different. And so the two things that I am looking forward to are, number one, and Blockworks is actually doing a great job of this, of standardizing a lot of the data when it comes to financial reporting and financial metrics. That standardization in the real world is called GAAP, generally accepted accounting principles. We don't have that in crypto. We could have that or should have that in crypto. So that's number one. Number two is people at these major banks who cover crypto equities, Coinbase, Robinhood, et cetera, are looking forward to being able to cover the crypto assets themselves. When you can have a research report for, let's say, Sky, which is doing X in revenue and Y in profit and et cetera, like, they want to write that report because that's a new coverage area for them. And it's novel, it's interesting. That would get a ton of readership. And I think as soon as we have market structure, whatever that bill is, we will be able to start to see these banks covering these assets, because they'll know, how to recommend them. Because ultimately that's what you're doing. It's like, are you recommending this as a buy, sell, or a hold?
And they don't initiate coverage on things that are sells. That's not really the business that they're in. And you do have to start somewhere. So, like, even for things like CoreWeave that IPO'd this year, no one would cover them for the first 9 months. It was like, Robert Baird Securities, or like my favorite one was, remember the bank that was like JP, it wasn't JP Morgan.
JPM Securities.
At JPM Securities, not JP Morgan. Like, you're going to have the lesser research houses covering the alts first, but you will eventually get the big banks doing it, if clarity goes through. And
and Cantor just put out Hype.
Right. I mean, technically that is a coverage report on the Hype, the per DAT. But like, we're getting closer to a point where people will be broadcasted the message through channels that they're used to seeing these things through, which is the most important thing. And I think, to kind of disaggregate the market, what you're going to have is, I think for 2026, and it's totally different than 2020, going into 2025, where people thought, 200, 300, 400K Bitcoin. I do think Bitcoin, ETH, and Sol get to new all-time highs, driven primarily by the ETF flows that are coming and the staking products that they will incorporate. I think you'll have that be a surprising feature of 2026, just to see those doing well. I think you're going to see these kind of DeFi coins that are blue chip and that are covered in clarity get their fair share. But then I think retail is actually going to have their prayers answered, where they're going to be less a part of the market, because there's going to be less tokens that are going to be launching. And I think if I've seen one thing on crypto Twitter this year is just like CT wants less coins. I think you now are going to have that dynamic. Maybe you'll have some kind of 2021 holdovers seek to launch their coins at the end of this year or next year. But really, kind of like that pipeline is broken. That supply chain of capital is broken, and I think it is broken for the better of the industry, because now the only things that will exist will be high quality projects. And I think, maybe putting out a different prediction here, but all of these IPOs, maybe you can think of those in the same way, and those are fundamentally driven businesses. But like all the things that people invested in 2021 that they tried to get out the door, this year or next, I think what you're going to see is a lot of that similar dynamic plays out for the traditional equities, where sure, like software companies theoretically should trade at high price to sales multiples, but we haven't seen that recently. And I think the reason that we haven't seen that recently is because there's been so many of them, and people can't disaggregate which one's good versus bad versus which one will stick along. But I think if you IPO Anthropic, OpenAI, SpaceX, Stripe, Canva, there's just not enough liquidity for these things, and the prices are going to be far below their private market marks. And that will be a moment that TradFi has to go through, Trad VC specifically, that I think crypto VC went through last year. But that it's kind of all this larger project of like, how do you price things accurately and how do you fix capital markets in the US?
And this is not this is not a new phenomenon. If you recall, right before Airbnb went public, I believe, they had that structured round that Silvergate did.
Yep.
That was like,
yeah.
The latest stage rounds that a lot of these pre-IPO companies, as they're called, will do are highly structured. And basically what that means is someone who knows that you're going to go public will literally put a covenant in there that says you have to go public in 18 months. And if you don't, I get a payment in kind of additional like 10% of my equity. And they will just structure this so that they're guaranteed not to lose, basically. And they will have limited upside, but the upside will be something like they have a small percent of your company to keep that valuation at a high level, but they have like zero downside. It's basically a call option is how they would structure it. I do think that there's going to be a lot. I agree with that prediction, which wasn't on our list, but I agree with it. I think there's going to be a lot of structured stuff that makes IPOs happen. But it doesn't mean that the floating price will be above those structured prices.
And you saw this with CoreWeave, which was the hottest stock of the year until it hit unlocks. And it does feel like TradFi is discovering things at roughly the same pace that crypto is, which is like the mechanical supply-demand imbalance is a real thing in any market condition, in any coin, doesn't matter the business. You're seeing this with Hyperliquid today. You even saw it with Robinhood in 2022. It bottomed at $7 and it's now at like 130. Like there's just no escaping the financial gravity of you need a lower price point for your sellers to get out so that they can be matched by buyers. And it's a time dependent thing where if a buyer doesn't show up on the same day as a seller, you're now amortizing that sell pressure into the future. And so it's just a process. But I think what crypto has going for it right now is Bitcoin, ETH, and Sol are going to be recommended by BlackRock. Single digit percentage of your net worth goes into those. I think those flows are going to overpower the bear case. I think the DeFi alts are trading at such low PEs, and maybe Hyperliquid is an exception. They're trading at probably 20, 25x, which is where the stock market is. But like, Sky is at like 8. But they built the discipline of like, no one will believe your story unless you're literally committing violence in the order books, aka buying your own token every single day with every single dollar that you produce. The tech companies have none of that discipline. And I think that lack of discipline from them, combined with the complexity of the AI story getting more pronounced, means that crypto probably has a better tailwind to deliver value and earnings in the near term than AI. And like, I think this year was basically, you throw a dart at the data center theme and it goes up 10x and everyone's super happy. They need power. Now it's a question of like, which one will be solvent? Who's working with OpenAI? Who's working with Anthropic? Which chip is the one that you should do? Which data center designer is the one that you should use? And it's becoming less straightforward. And I think also the value prop of AI is getting pushed out further, where next year is probably not going to be an explosive year in the same context as this year and the last, as people get used to ChatGPT being just a feature of their daily lives. Um, and I think in a weird way, the AI trade becoming more complex and stalling out a little bit gives crypto a lot of breathing room to run. And I think the kind of logic is this: if AI is going to solve all society's problems immediately, we're going to we're going to undo the national debt, we're going to have universal basic income, it's going to be amazing. Maybe Bitcoin doesn't have a place in that world, and Bitcoin relies on kind of secular stagnation and the collapse of institutions, and I think ETH as well to some degree. But if that is not the case, and it looks like the national debt is not going to be solved, AI is not the cure all for all of our problems, I think Bitcoin specifically plays better in that world. So just thematically, I think the AI trade cooling off, it can't fall apart, right? If it falls apart, then we're all kind of in trouble. But if OpenAI can raise 100 billion, if we can kind of get to new levels of users without significant churn, and just keep it intact enough, that there's like a not too hot, not too cold area for crypto that probably is very good in 2026.
Yep. I mean, going back to 2025 review a bit as it leads into 2026, I think what ultimately, and this is maybe I'll answer it, but want to get your take as well. What do we call basically everything post October 10th? And like, is that the end of the 4-year cycle? Is it the death of the 4-year cycle? Is that just your run of the mill 30% sell off in a bull market? Obviously we don't know because it is still down, and so like the longer it goes, like the more clarity on the definition we get, because it defines there's no V-shaped recovery. My take generally is that we are at the end of the 4-year cycle, and I think that you kind of said this as well. Like if we do hit all-time highs of ETH, BTC, and Sol, or just like some combination of 2 or 3 of them, that it disproves that we're in a 4-year cycle. That's my base case, and the way that I describe this transition of retail capital to institutional capital is it's kind of like the institutions are not just like they're not coming in size or like on one day or in one quarter. It's kind of like this global super long TWAP on the major assets, and they're thinking about it in terms of, well, I want to allocate 0.5% this year, 1% next year, and then up to 3% the year after that. And like, so that it's just like this kind of like they're buying a little bit all the time. And when you have the end of the 4-year cycle, and we heard from people on our team who were in Abu Dhabi that the Asian whales sold all their Bitcoin or most of their Bitcoin, and the logic behind it wasn't anything more so than, oh, it's the end of the 4-year cycle, we'll just buy back lower. And so when you have a global TWAP that is like inherently just this slow kind of like buying, but then you have this mad rush for the exits catalyzed by this like fake end of 4-year cycle thing. It's why you have a dip for 30%. And because the TWAP can't sustain, that much unified selling in a shorter period of time. And I think 1010 was, some event, but it was just like it happens to be the one event that tipped, the scales. It could have been something that happens in November or December or January, who knows? But it happened to be 1010. And maybe someone had a hole in their balance sheet that they needed to shore up. Who knows? It seems like it's basically done now. And now we've kind of moved into like, okay, well, tax loss selling for the end of the year, or, wash sell, like whatever it may be, locking in gains. But like end of the year kind of takes over. And so I think, the prediction here is that we actually come back pretty strong in January, and it happens pretty quickly, because you have a lot of people who will recognize that this isn't, and if we are in a 4-year cycle, and the word from kind of the Asian whales who sold all the BTC was, well, we'll just buy it back at 60K. It's like, well, we're trading at 85 right now. It's like, do you really think it gets down there? And are you willing? How long until you say, okay, well, I sold it at 105, but it's not going to get down to 60, so maybe I'm just going to buy it at 86. And like that's where that time duration kind of like leads you in the direction of buying back in. And so I think there's going to be like some pretty, volatile or just like up down kind of movements as we've seen this week. I think that'll continue basically for the next 12 days, 13 days, rest of the year. But I think after that, it's like the selling turns to buying pretty fast.
And
Um,
and the one of the learnings I had from 2022 is like on a year where you hit a huge peak and then you come off significantly, you're going to have tax loss selling at the end of the year. And usually people do it the week before Christmas. Not many people are trading markets actively the week of Christmas, maybe the week after, but the selling does stop at some point, and I think it's kind of time to be year end because there is a tax benefit to sell. Um, let's talk through. I mean, stable coins just next year. I think
yep.
is kind of where the market has settled as a most promising direction for kind of the industry writ large. And even like when we talk about people or when we talk to people about what framework is doing is mostly like we're working on stablecoins. Um, and it becomes kind of this like language permission structure to work in crypto, but on something that is not kind of like nefarious or unregulated. And I
Well,
think
I was just going to interject and say, like, unpack what it's hard to make a venture scale outcome on a dollar based asset.
that's like what is the stable coin going to go to, like $2? It's like, well, yeah, of course the stable coin isn't going to go to $2. The promise of this business model is that you have corporate equity, or in probably our context, a governance token that sits on top of a protocol that is issuing stable coins, lending stable coins, or creating yield sources for those stable coins. And I think what you're going to see next year is, Klarna USD. You'll probably see Stripe USD. You'll probably see a variety of other I think SoFi actually just launched their stablecoin today. Um, my prediction on those is that they're flops. And I don't think they're going to be flops because those organizations are not skillful. I think they're going to be flops. And I would say maybe Stripe USD. I don't know if that's coming, but I would say that's kind of the exception. Um, they're going to be flops because they don't understand like what is going on inside of crypto. And I think what's going on inside of crypto is basically capital formation and yield distribution. And in a permissionless way, there's product market fit for that, as we've seen with USDS. But what we're going to see now is people doing energy lending, doing AI lending, doing crypto capital markets lending, doing trade finance, structured credit, and seeking to get the backing of stablecoins as the base layer for their own TVL. And it'll become less about retail. And I think one downstream implication of that is like RWA looping. I can't tell if that's a feature 6 months from now of this industry, or maybe it's just a flash in the pan. I've tweeted about it before, but retail capital, I don't think is driving altcoin price discovery of majors, or frankly, like on-chain activity anymore. It seems to be 100 to 1,000 institutions with a ton of money each, 100 to a million to a billion, that are really interested in this subsection of the economy. And that's kind of like this captive customer base. And I don't think the existing stablecoin fintechs are going to be able to provide that same level of experience or a set of trade-offs for the feature set. And so I'm kind of bearish on those, but I'm super bullish on just like the winners is staying on winning, like Circle growing, Tether growing, Sky growing. And I also don't see any new projects like Athena, tried to hit escape velocity, lost 70% of its TVL. I think that they're going to be the last person that has tried that because it's just such a capital destructive strategy.
So my prediction is maybe slightly different, but maybe similar in that. Yeah. So I think one of the data points is look at Pi USD and basically the lackluster TVL that it has. Pi is PayPal, which owns Venmo. Like this should be the largest, user. Yep. This should be the largest, payment stablecoin because of Venmo just in and of itself. But it's not, and nobody uses it. They also had the 3 trillion or 300 trillion bug, or however big that was that they minted, which I think there's just like, it doesn't seem like the A team is working on Pi USD. But I do think that all of the different launches for PayPal, SoFi, Klarna, what they are going to eat into is basically Circle's lunch. And they are going to be going after the institutionalized financial services application, fintech application, probably US centric or European centric models that eat into specifically Circle. And so my bet is that yes, Circle from a total assets in USDC probably grows. And I mean, it definitely grows in 2026. But I think that one of the narratives that pops off in 2026 is that Tether, which already has basically 2/3 of the stablecoin market, if not more, increases its market share by a substantial margin in 2026. And I think that that is going to be driven by rest of world phenomenon. Tether also has at least announced the USAT Genius compliant stablecoin for US centric stablecoins, stablecoin adoption. I'm guessing that that takes off as well, just because of the Tether brand and distribution. And so I think, yeah, stablecoins is payment stablecoins in particular is going to be a really interesting place to watch in 2026 because it's going to be this fight where you've got competition. If you're Circle, you've got competition on above you and you've got competition below you. Like it's going to be really tough. Also, a rate cutting environment where you
Rate
are
cuts are going to suck for the people who are Genius compliant. And I think a real reevaluation of whether you want to be Genius compliant is probably in the cards for most stablecoin issuers.
And I think it makes sense from a business perspective, like Tether, where you can issue a Genius compliant stablecoin. And Genius compliant basically means you're backstopped by T bills and cash, but your business is based around what is the yield of those T bills. So if your core business, if your entire business is going to be based around that, which is the case for Circle, it's going to be very difficult to have that be kind of your business. And Circle, remember, gives up much of their yield. We'll see how this works, but at least there is rumors and discussion around whether or not that's going to be a remaining capability based on the market structure. That was something that was blessed in Genius, but it's question as to whether that's persisted after market structure. My guess is it probably is, but there is a question. So, like, if that doesn't happen, then what happens to the growth metric, the growth vehicles for Circle and USDC? Because a lot of that is Coinbase. And so, I think this is going to be one of the most fascinating places to watch. All that being said, your description of like yield coins or businesses that you're bringing on chain, like that is not payment stable coins. Just to be clear, what you basically take is the payment stable coin, which is deliverable to $1, redeemable for $1, and you give that to a business who's doing GPU backed lending. And so that I think is like kind of the most interesting place to play from a venture perspective, but also just like bringing businesses on chain in 2026.
And like all the asset like the fintechs that are trying to launch stablecoins are kind of one bucket, and what they want is like savings products. They want to announce some crypto stuff to drag their multiples higher. But I think the asset managers of the world have capital to contribute to the on-chain economy, the Apollos, the BlackRocks, the different private equity firms that we talk to. But they also are looking for capital to come from crypto into them, and just the origination side to kind of flow both on and off chain. So like I think when we started investing in crypto long time ago, there were no fundamentals. I remember we bought, like, what was the Chainlink ICO at? Like 60 million bucks, 70 million bucks FTV?
32 million FTV.
32 million FTV. And it went from that to, it was at 10 cents, right? The ICO for Chainlink. Right. Like, it was probably between, I remember the first real kind of like summer that we got bullish when we realized we're holding on to something special was like that $2 to $3 move when they were announcing like the Google partnership. And that Google partnership, it's like various stages of becoming real at that point. But right now, I think there's a lot of assets that are still at that $2 to $3 price point, like that $1 billion FDV, that have a ton of revenue and earnings that are just left behind by the market. And it's like it doesn't feel like the last bear market where everyone was convinced that this was going to be a real industry and like we just needed to get Sam out of the way. It feels more like the 2017 bear market where people are just like fundamentally uncertain about sticking around. And those are the things that produce the most hyper concentrated violent rallies and the things that are working on the small side, on the alts. And then on the large side, like the Bitcoin, the ETH, the Sol, like I think there's different dynamics there where people just believe like, relative to stocks, like, is this a value bet? But I think at the end of this year, the data center trade got cut by 60%. The space trade got cut by 60%. Quantum got cut by 60%. Bitcoin, ETH, and Sol have kind of hung in there. And so I think kind of everything is priced to double or triple in the crypto complex on the major side. But on the alts, like if you're a sharp person, I don't think there's any higher risk return environment for you than being in DeFi and understanding which coins are going to be driving the next era of this evolution. Um,
One, just to go back to it real fast, because I want to put this on the recording so we could revisit it in a year from now. But my prediction is that we end up with somewhere between 600 and 750 billion of stablecoins on chain by the end of 2026.
I like that.
So it's not quite the $1 billion mark, but the idea is with a clearing of the path of genius earlier this year, we've seen, at least internally, we've seen probably tens of proof of concepts at banks, financial institutions. A lot of them were waiting basically for this to pass, and they had previous work done, but a lot of them are starting fresh. And I think in 2026 you start to see those proof of concepts go live, which is where you're going to start to see, SoFi has their dollar that they had announced. Klarna has theirs. And while I don't think that those are going to be this huge value drivers, there are many banks and financial institutions that are working on chains where they're going to integrate an existing, stablecoin. So I'm guessing that we at least double, if not 1.5x, in terms of total stablecoins by next year.
Maybe let's talk about just like the crypto VC dynamic right now. I think the initial take on 2026 is that I think people will be surprised that some folks have been able to raise significant sums of capital to continue investing in this industry. I think, frankly, like the existing firms have been burned on any round that's higher than $1 billion, probably any round that's higher than 500. And so like the valuations are going to compress. I think what you're also seeing is probably like this like 50% to community idea has been thrown out the window. So that necessitates kind of like a cap table reconstruction. Are twice as many tokens going to insiders? Like I'm sure retail would not love to hear that, but like I think there is this wholesale rethinking of how you even fund a crypto protocol. And then I think there's the reality that a lot of these firms are going to have to pivot to doing something more liquid. And again, it's not like a basket of like 100 different tokens that you can build and feel confident in. But like the firms that are going to make it are going to be those that are really convicted in 1, 2, or 3 assets, and that goes like 1,000x. So like one idea of that is like Tempo. Maybe that's not liquid, but like it's like a big chunky venture bet that can carry a fund, and like Paradigm has a lot of hype too. One example of that is Thea with the MetaDAO token. And like I personally don't fully see the ownership thesis, but I give them a lot of respect for doing a ton of research and being high conviction and high concentration in one idea. But I think what you're going to need is you're going to need to see these VCs either doing venture building to use their capital or doing liquid, because there's just not enough private market deals to do 500 million, $1 billion into as the industry currently stands. And then I think there's this broader idea of like, if you're going to be a venture fund, like, are you really going to rely on people walking through the door and blowing your mind with like a new crypto idea? I just don't think that's realistic in terms of where we are with the technology or just like the GP's understanding of what it's useful for relative to the entrepreneur. So, I mean, that's my take, at least. Michael, like, what's your kind of thought?
Wholeheartedly agree with that. The venture landscape right now, it's the tale of two cities. It's the haves and the have-nots. And if you have, it means that you can raise capital and you can continue on as a firm. And if you have not, it frankly means that you're probably coming back with like 15 to 25% of your target for your fundraise, whatever that may be. And then it's a question of, is venture the right strategy for what you're trying to do? And does the 30-person team that you have really map to your business, which means your 2% management fees on this new fund that's 20% the size of what you expected it to be? I think that's going to trickle down into what are these investment rounds looking like, and you're going to have to basically founders are going to have to go through austerity. Is my take, where you're not going to be able to have 40, 50 people at your protocol and expect to be able to raise another $25 million just to be able to subsidize the cost of having that large of a team. And I think people, in the same way that 2022 provided an opportunity, you're going to have a lot of quiet quitters. You're going to have a lot of people who are just like willing to kind of throw the keys back and be like, it's yours now. I think you're also going to have, some people, some founders who are just going to stick through it. Those are going to be the ones to double down on. And it's very clear who is who and who is not. And yeah, I think.
And one more, the OGs are going to become irrelevant. And that's going to be really tough.
If they're not already. But I think there's this kind of joke analogy that we've been using internally where it's like, who is that the Japanese warrior who's been hiding out on the island for 30 years following the end of World War II?
A lot of them are people that were obsessed with decentralization or obsessed with, we need to make this like whole thing on chain. And it doesn't have product market fit. It's not personal, but those are no longer going to be the torchbearers of this industry.
And I totally agree. And going back to something I said earlier, but like you're not going to be able to rely on your customer base coming from crypto. You have to be willing to sell and build product that people want for people who are not, or customers who are not like crypto audience members, crypto Twitter members. And I think that is like the hardest realization for a lot of people, because it sucks. You've got like a 2 to 3 year build program and you're testing, iterating your product, and you're planning for this 4th year in the 4-year cycle where you can launch it and, retail audience, and it's an alt season, but that never happened. And so what do you do now? And how do you put the genie back in the bottle? And I think the other element so this is one of my predictions for 2026 is I'll get to it, but it's basically an expansion of the multiple. Whereas right now, if you are a crypto founder and you haven't launched a token, if you want to launch a token right now, I think Vance, you said this, but like hyperliquid trades somewhere between 18 to 24x, depending on how you calculate market cap to earnings, not even just revenue. And 97%, 99% of their revenue is earnings, so it's the same. But the idea is, okay, that is the aberration, because they have literally hype around their asset and protocol. But most assets in DeFi right now trade somewhere between like a 6 to 7 to 10x. Like that's what you're looking at from a price to earnings perspective. And so if you are a founder and you're planning on launching a token, the question is, if you're talking about valuations, it's like if you have a $60 million valuation, like what you have to expect is that investors are underwriting you to be earning a $10 million earnings in, let's call it 3 to 5 years. Like how are you built? Like the conversation turns to, well, how are you building that? Justification. Like, how are you actually getting like, who are your customers? What's the revenue, and like, what's your cost structure around that? And so I think it's a very sobering kind of realization for a lot of people when either you're thinking about raising capital and what's the valuation that you should, put for your protocol, or if you're thinking about launching your asset and how do you comp this to the rest of the universe of other digital assets and tokens that are out there. Right now, it's like, it is a buyer's market. And so I think it's just very, very tough in that respect. Granted, I do think that with market structure bill, with a realization of what we have called before dispersion, which is like assets that have fundamentals and a path to getting there are going to perform better than ones that don't. You're going to start to see the multiple increase. That 7 maybe turns to a 15, maybe turns to a 25. And you're going to have more excitement around assets that have a process towards getting there. And this happened throughout every single tech wave before. When you had the SaaS business model, people would underwrite it because they'd say, oh, well, we've seen what Salesforce can do. And actually, if you cut cost, you're able to get these customer lock-ins that have an average duration lifetime value of like 6 to 7 years. Like, that's amazing. And we can just like print cash as we sell these, seats per or licenses, whatever. And now you've got AI and people are looking at it and they're saying, well, if you assume the cost structure comes down over time, like these are highly profitable businesses. And like markets are fantastic at looking forward, 3, 5, 10 years. But right now we don't have any examples to prove this is how it could work. This is how it could look. And I think that 2026 broadly is a recognition of how this could look. And I think what trickles down from that is a recognition of the multiples increasing, a recognition by the multiples increasing.
Right. Like in traditional tech, it's like the multiples bottomed out for SaaS after the dot-com crash and then kind of like broadly after the great financial crisis. Then you saw private equity firms start to buy these SaaS companies. You start because they were low PE. Then you saw public markets start to buy the public software companies because they were, medium PE. And all of a sudden everything's trading at 25 to 30x. And so like there is no PE equivalent for crypto in terms of buying tokens. It's kind of like, you buy them for the earnings and you buy them because there's the possible principal appreciation on the token itself. So I think what you're going to see is, when things get cold, people huddle towards the fire. And there's only going to be a couple fires burning next year, which I think is totally good. We need to walk the industry back from this idea of we're going to have a ton of breadth and you just need to throw a dart at random at an altcoin and it will 10x. That is just the worst conditioning that you could have, and it leads to a lot of bad outcomes, and it leads to a drawdown when tokens launch. But I think we're moving past that. And while we were talking, David Sachs actually tweeted. We had a great call with Chairman Tim Scott and John Boozman, who confirmed that a market for clarity is coming in January, thanks to their leadership, as well as French Hill and Congressman GT in the House. We are closer than ever to passing the landmark crypto market structure legislation that President Trump has called for. We look forward to finishing the job in January.
Look, we say this at Framework, but you either have business fundamentals or you have a BlackRock ETF. It's one of the two Bs. And frankly, like business fundamentals is going to be how 99% of these things, actually have a sustainable value for their token. And market structure bill, clarity, whatever it's called, is the path to making that happen.
It's, yeah, I mean, it is tough because a lot of the people who got us at least part of the way here are these kind of decentralization people, retail who wants to do meme coins or speculate on just like financial nihilism, and the industry is not taking that path. So I think a more professional industry, all-time highs for the majors, and DeFi catching a serious bid is kind of the base case for 2026, with I think this potential for a fast takeoff scenario if you see the fintechs, if you see the asset managers, everyone integrate. But still, I think crypto is only possibly able to produce these hyper concentrated rallies, and I would expect that to be the case for 2026. And let's see just kind of what else. I mean, maybe prediction markets is one to cover.
100%. I mean,
I think it's going to be a tough year for prediction markets next year.
Well, I think, look, prediction markets came onto the scene in a wild way in 2024. What I will say is that everyone, including ourselves, expected that basically, volume goes down 90% the day after the election. I've been surprised to see the amount of interest and excitement around prediction markets in general. I do think that we have kind of like crossed into this new realm of these are just going to be like a mechanism and a construct that exists kind of forever. And we'll see how big they get or how they're paired against things like options or derivatives or what have you. Like, I do think that there is some novelty to this from a consumer perspective. Remains to be seen on the financial side. And so, like, for instance, if you're a financial institution, you want to bet on what the interest rate decision will be by the FOMC on a given date. There are tons of financial instruments and trades that you can put on to do that. Or you can go on Polymarket and say, will the FOMC get cut 25 basis points next meeting? Is it 50 or is it 75 or 0? Like that stuff, I think, makes it approachable from a new kind of like perspective, which brings in consumers and retail. And now there is a really, really big question, which I think is something that is unsolved right now, which is market surveillance. And what I mean by this is in every single securities market, you have market surveillance, you have securities laws. The SEC exists and the CFTC exist for very important reasons, which is to make sure that markets are structuring in a proper way. If you have inside information and you trade with that inside information and you're caught, you go to jail. And that threat keeps markets fair. And if you don't have fair markets, ultimately what happens is, I think, um, what has happened time and time again, which is that markets kind of degrade to zero over the long duration, because people will recognize that they're just getting competed away by the sharks, by the whales, by the people who have that inside information. And like one of the examples when we were starting Framework that one of our lawyers told us was, you kind of had this like third party platforms for fundraising for like individual loans, and like you would package these things up and it would be like you could lend to this person, and kind of like what SoFi started as in a lot of ways. And over time, it was like you could lend capital and people would pay you back over time. But ultimately, what happened was there were like 3 hedge funds that took over the entire market just because they were sharper, they were bigger, they were better, and cost of capital was lower for them. And I think that same dynamic, same phenomenon could happen if they don't solve, if these prediction markets don't solve market surveillance. And look, if you're a founder, if I'm Shane or if I'm the Kalshi founder, like I actually want market surveillance because it allows me to say, hey, like it's fair to trade here. You're okay if you come and like place a bet. And it's whether it was Binance who had the hole in their balance sheet after 1010 or whatnot, but no matter what they did, is they made sure that their customers were happy. Because if you blow up your customers time and time again, you're going to lose them each time, and over time it degrades to zero. And so I am my prediction, I guess, for prediction markets is that we have some answer for what market surveillance looks like for these prediction markets.
I could see that. I mean, I think the Google insiders and like the other insiders trading on these things has kind of brought this to the fore. So there's not too much time now in terms of the government reacting.
Well, oh wait, one thing. So like, there's the SEC and the CFTC who govern markets, but on the flip side, you could have a situation where like in the case of sports, it's the sports leagues that adjudicate whether or not you can place bets on sports, and like the default is a lifetime ban, like Pete Rose. And so like it doesn't have to come from a regulator, is my broad point. Like it could be like if you work at Google could implement an employee policy that says you're not allowed to trade, on Polymarket for Google related things.
Maybe the last thing to cover is just like the macro, the midterms, the Trump effect. I think kind of my view is as follows, and I'm curious to get yours. But interest rates are going to go down. Kevin Hatchett, he will be cutting rates. I think Powell's term is up in May,
Yep.
so that you'll probably get one other cut in January. But like, I think the really interesting thing to think about is like, where is the actual floor for SOFR for the Fed funds rate? They are 2 meetings away from cutting twice and it being at 3. But that is even before Hassett would take his place as one of the governors and have, I think, 3 more meetings through the rest of the year to cut rates. So there's like actually a lot of time to get these rates down. And if they're working at the same clip of like 25 a meeting, that's probably like a 2.5% SOFR by the end of next year. And I think with that comes a steepening yield curve. So like there's more term premia, which is basically you get paid to take risk that's further dated, and also more credit spread. So credit spreads are at historic lows. You probably get paid to take more risk outside of the treasury market. And so I think you're going to see kind of these 2 opposing forces where we're cutting rates like it's going out of style, but at the same time, the shape of the yield curve and credit spreads are getting wider. Overall, the price of money going down means that assets probably go up. And so bullish on that. I do think we will have one midterm freak out where people think it's going to be a Democratic sweep. Right now, the best odds on Polymarket are 50-50 for, the Senate goes to the Republicans, the Democrats get the House, which wouldn't really impact things too much, but it would kind of make Trump a lame duck, which may actually be a bullish thing. Usually the most bullish year of presidencies are the 3rd year. So that would set up 2027 to be quite nice. But yeah, that's kind of my take. Maybe we can get yours and then wrap it.
Yeah, I think so. Fed dot plot suggests 2 more cuts, 2 more 25 basis point cuts. Anything more than that is a surprise. I think dot plots are probably not the best metric to use right now, just because it's like we don't know who the new Fed chair is going to be. So like, who knows what influence that may have. I would guess that we probably end the year somewhere on the low end of Fed funds rate. So like right now, Fed funds is 3.5 to 3.75. I bet we end the year at below, like with a number below three, where it's 2.75 to three or 2.5 to 2.75. Who knows? Like somewhere around there. Um, I agree that that's bullish. The reason why we have credit spreads so low is because people assume that Apple, Microsoft, Google, they have better credit than the U.S. government. And so I think that is definitely an interesting phenomenon where their spread, their yield, or their debt is inside of the Treasury. So I think that will naturally change. I think it could also change if you start to see more capex spend, especially on the hyperscaler side. So I agree with all of that. I think there will be a freak out. I think there will be, some 10-15% crash. You just have to go into the year planning for that to happen. So like, don't over lever yourself and get caught in 10-10 or March 9th or May 9th, whenever that was. I think the what my other prediction from like specific industry specific perspective, which I think is now kind of macro, at least U.S. GDP related, is I think AI comes back in a material way. And what I mean by this is um, what we are basing so much of the AI industry on over the last 12 and 18 months has been the progression of the different models, in particular ChatGPT, Gemini. Um, in Chat GPT 5 was kind of a lackluster launch. And this is, kind of perspective from Gavin Baker, but also some of the other perspectives broadly is we haven't yet seen what's called the Blackwell chips being utilized to train these models.
I like this. This is a good take.
And we've been using hoppers. Hoppers are air cooled. The Blackwells are a multiple more compute units tokens per energy unit. And they basically shipped and installed Blackwell starting in the second half of this year. And it takes 6 to 10 months to train these, large language models or any other model in and of itself. And so I think in 2026, we see a prediction is we see the largest increase in model improvement broadly, whether it's, efficiencies, capabilities, or potentially even use cases. So 2026 will represent the largest increase in baseline models coming into the year, baseline models ending the year, particularly because we're going to see the GB300 really at scale, which is the high scale Blackwell chip used to train these models. XAI has been the largest user of Blackwell units to date. Google obviously has the TPU. TPU is not up to scale quite with the GPU in terms of this stepwise function. And so I think Gemini, which is kind of in the lead right now, ends the year in 2026 probably lower than first. I think it still improves quite a bit, but it doesn't improve as much as some of the GPU or the Blackwell trained models end the year. And so I think all of this, just like these massive improvements in these models, leads to a really big resurgence in interest, capital, and kind of market for AI, which I don't think kills crypto, to your kind of previous perspective of like there's kind of a spread trade here. But I do think that it does kind of reinvigorate the interest in the models themselves and the technology themselves. And actually, I think that this comes into play in crypto via the AI protocols and platforms in crypto. AI over the last 12 months has been CapEx dominated, and that's been the narrative. I don't think you have the same level of CapEx, so you don't have the impact on GDP. But I think the technology of AI, like the actual use cases and applications, that is where you see a lot of the excitement in the next 12 months.
It's very true. It's like an AI driven cycle, and it's very capex heavy. And crypto stands to benefit from things that are capex heavy because it is a capital rich area of the tech universe. And so the convergence of those trends, I don't think like hosting models on chain or like Hugging Face on chain, that makes as much sense. But it's an extremely bullish tailwind for the industry and for next year. And I think, what we have to look forward to of next year is, hopefully new all-time highs. That's certainly the camp that we're in. DeFi alts going absolutely parabolic if they're really regulated and communicating clearly, as well as just the AI CapEx tailwind continue to pick up. We talked about the data center trend being absolutely eviscerated at the end of this year, but we have never seen a model that's been trained with a Blackwell. And with Blackwells, the important thing to understand is that we've gone from air cooling to liquid cooling. We've gone from a certain level of density to 2 or 3 orders of magnitude higher in terms of computing power. And so it's just extremely bullish for if you're going to see that step change for OpenAI or Anthropic, it will be through these new models, which will be directly or indirectly financed by stablecoins. So I think a lot to be positive about going into 2026. I think 2025, we've done like the really tough work of like, if you've got like a body that is infected with gangrene, you need to cut off those limbs. And I think we've just eviscerated those limbs. And maybe we have like one leg and, like half an arm, but like we're regrowing them in a more productive direction. And I think that's about as much as the industry can really hope for it. It's not a nuclear winter. There's fundamentally things being driven. There's inflows from these ETFs, but we really do need to leave behind the fuckery, the meme coining, the NFT shit, the overfocus on decentralization. And you don't need to disavow these things, but you just need to kind of move past those as the focal point of this industry because it's just not.
And I wholeheartedly agree with all of that. I'd say the last things I would say are when you look back at a year, it is predicated on your happiness over a period of time is predicated on what were your expectations and then did you live up to them. And when you start the year with the highest potential expectations, like basically anything is going to be a letdown unless we hit like 250K BTC, which is never going to be the case in the first place. And so I think people had to take, doses of medicine. They had to readjust their plans and they had to, readjust their like business models.
Yep.
And so I think that has been a lot of pain this year because of it. And I think when I look forward into 2026, like just imagine the feeling when BTC is at 126K and you're back above all-time highs. And, it's like, oh, well, the 4-year cycle is over. Wait, I need to recreate my entire mental model for this entire industry. Like that's going to happen in 12 months. And so I think like that's what I look forward to. And I'm excited for 2026 because of all the downstream implications of that effect, which are vast for the industry and for industries adjacent to it.
Well, in 2026, you can also, I predict that we will have a pod name and we will be podcasting. I'm going to say weekly. Hopefully it's weekly, but I think, generally like we've gotten so busy with good things that, there's a duty to the audience that the people who still ride with us that, we're going to get these updates and interviews and interesting philosophical conversations out. But it'll be under a new banner and hopefully reinvigorated focus with 2 of us and more of a San Francisco vibe. So, yeah, thanks everyone for a great year.
And in 2026, soon come, there'll be more announcements on the positive things, which gives us more time to focus on podcasting. So we're coming back.
Yeah, a couple big framework announcements, all good things. Thank you, everyone. Merry Christmas, happy holidays from both of us. We'll see you in 26.